Hi guys, welcome to this Moneycontrol live stream. It's a Friday morning and not a pretty picture. If you look at our markets, we shed somewhere around 1% or thereabouts yesterday. But more importantly, we broke below that crucial level of 24,750 as well. And, the Nifty, of course, perched at 2-month lows. And if the GIFT Nifty is anything to go by, we are poised for another day of triple-digit cuts. But of course, it was weekly expiry. There was a fair bit of volatility, but it was the auto pack that was the big culprit, that led to such a sharp sell-off in the markets. Of course, lots lined up over the next 30 to 35 minutes or so. We have important earnings to discuss, the likes of Infosys, Wipro, Axis Bank. These are some of the numbers that came in post-market hours. We'll try and take stock of all the earnings and what the brokerage verdict is. We'll also be, addressing all your stock-related queries. So if you have them, keep them, coming in on our live feed. We'll try and take them up. But of course, before we move any market, on that note, let's bring on board our technical guest for today. Joining me is Ajit Mishra, of Religare Broking. Ajit, great to have you on the show. Crucial support levels being broken. I mentioned 24,694, the October 7th low. Would that serve as an important support level on the index, or do you see lower levels?
Yeah, good morning, Namita. So, yes, we are again back to the square, this kind of attempt of recovery that we were seeing from last almost 5, 6 trading sessions. So, finally, we are again, retesting that mark. The way the GIFT Nifty is indicating a negative start, I doubt that we are going to hold this level. But on the closing basis, it's going to be important to where we close today, because obviously the market is going to react to the Infosys and Axis Bank number also in the early trade. And then, tomorrow we have a couple of other big names like SDFC, Kotak Bank will be announcing their numbers. So banking, till yesterday it was among the leaders, means the sector which is trying to provide some support alongside with IT and pharma. But that also slipped, sharply lower in yesterday's trade. So now, as per the setup, it seems like that 24,400, 450 is something that, we might head towards to, which is the 100 EMA placed on the daily chart for the index. So the setup looks negative and the bias is not going to change. In fact, the resistance that we had earlier, close to around 25,300, that has shifted to around 25,050 to 25,200 zone. This is a sell on rise market as long as we are not seeing a close above 25,200 and 24,400, 450 is going to be the next major support to look at.
Okay, take note of the levels that Ajit just mentioned. 25 till the index closes above 25,200. It is largely a sell on rise market. But since you alluded to banking names, or three major banking names in focus in today's session. Of course, Axis Bank will be reacting to its numbers. Profits managed to beat estimates. Net interest income was below. Although asset quality, that was a cause of concern, saw some bit of an improvement, and loan growth, as I had mentioned at the start of the show, is at a 12-quarter low. But you have brokerages giving out buy calls here, 1380 kind of target from Nomura, and expectations were fairly muted. In light of that, the company has, or the bank has, reported good set of numbers. Also, they used the one-off tax gains to cushion provisions as well. So, going into earnings from HDFC Bank and Kotak Bank, among the three, which one would warrant a trade at the current juncture? Because looks like Axis Bank is in for a positive reaction to its numbers. But ahead of numbers, HDFC Bank, is that a trade, or would you prefer to play it safe and look at an Axis Bank? Because Axis Bank has also been a fair bit of an underperformer along with HDFC Bank.
Right, so Nanda, from the trading perspective, I feel that Axis, since the suspense is over for us, so and please, we are trading closer to the critical support, which is placed around 1100 mark. So in case if it manages to open above, let's say 1150 mark, then we can see some recovery in Axis. STFC and Kotak, they are also trying to participate in the recent recovery, but with the continuous selling from the FIs, again we are seeing a similar kind of a downtake or a decline that is ensuing after the recent up move. So among all three, I feel that Axis looks comparatively better from the risk reward ratio, with 1100 being the stop, and the upside, 1220, 1250 is the zone basically where we may see this recovery extend. So as of now, if somebody is looking for any fresh trade, then Axis Bank is a better candidate.
Okay, that's the view on banking. But from banking to IT, Infosys, delivered in terms of what was being expected. With respect to guidance upgrade, revenue growth has been best in class if you compare it with peers. Even Wipro, for that matter, managed to beat expectations. 6 quarters of revenue decline. After that, it has managed to hand in some bit of revenue growth as well. But guidance was a sore spot when it comes to Wipro. What would you do with an Infosys, given the fact that yesterday, ahead of earnings, we saw good traction, but today, going by what the ADR did overnight, and pre-open as well, I can see that Infosys is shedding somewhere around 3.5 to 4%. Would you book profits here, and perhaps look at other sectors? What would you do with an Infosys?
So, Manta, in fact, among all the key sectors, it's only IT and pharma which are still showing some bit of resilience despite the negativity that we have seen in TCS post numbers. Infosys, I feel that until we break this 1850 mark, one should not hurry exiting your long. So, if you have let's say a positional view for a month or two, then you can maintain your longs with 1850 as a stop. If it's a very short term trade, then definitely below 1920 in case if it opens, you can reduce your positions. But still, I feel that IT is comparatively better than the other sectors. We may see some consolidation of profit taking, but indications of any serious decline seems unlikely at current juncture. So IT is kind of like a safe haven for the markets right now. So for Infosys also, I would recommend that until we break 1850, one can stay put.
Okay, that's the view on Infosys. Just want to point out, I was reading a report by Morgan Stanley on Infosys. They have an overweight call on the stock, and the target price is at 2150. They've said that there is some bit of possibility of some bit of correction in the near term, but any potential correction should be used as an opportunity to build positions. That's the call on Infosys. But I want to take stock of some of these gas stocks because they have been in focus. CNG transport allocation to some of these gas companies like IGL, MGL, they have all been reduced by 20% effective 16th of October, and the reduction in allocation is expected to impact profitability as well. All the companies are exploring rather options to source gas via domestically produced gas, also via benchmark linked long term gas contracts as well. So this has come as a setback, and we have some of the brokerages also pointing out that this will be a drain on earnings for some time, given the fact that these companies, these stocks rather, have been in focus. Yesterday they saw some bit of reaction, and today as well they are expected to see further sell off. Any particular stock that's catching your attention between Gujarat Gas, Mahanagar Gas or IGL, and any gas stocks that you would be keeping on your radar?
So yes, in fact, they have already seen decent correction, and now since they have opened further lower today, and we feel that closer to around 470, 480 mark, we have multiple supports in IPL. So that could be the area where we may again see some buying interest coming in. So I feel that the damage due to this news is already been done, and there is a possibility that we might see some consolidation followed by a rebound. So among all these names, IGL is a better candidate to look at, with 470 being the closing stop loss.
Okay, IGL a better candidate to watch out for. On that note, we are getting the first ticks and slipped below that 24,700 mark as well. We have taken out the October 7 low of 24,694 as well. It's almost a 100-point cut coming in on the index. Sensex as well below that 81,000 mark. further below that 81,000 mark, 350, 360 point kind of a cut. Bank Nifty weak, over 100 point cut there as well. But, I just want to see which of the sectors is leading the losses today, because yesterday it was the auto pack that shed somewhere around 3.5%. Even the realty pack was down 4% or so. Today, IT, that's emerging as one of the big laggards today. 1% cut coming in on the IT pack. Just want to see what really Infosys is doing at the current juncture. It is among the top Nifty laggards as was being expected. 2.5% lower for Infosys. But any sector that's managing to hold out? No. Maybe Nifty private bank index is higher by about 0.1%. But aside of that, if you look at the texture, clearly on the downside, all of the sectors are under selling pressure. Autos are extending losses, another 1% cut coming in there. Metals are down by 0.5% or thereabouts. Remember, China GDP data has come out and it's slightly above estimates, but it isn't enough to provide any kind of support to the Nifty Metal Index, because so far the stimulus announcements that have come in from China have been underwhelming, and the metal pack has been fairly reactive to news flow from China. So today as well, even though the news is positive, no reaction coming in there, and it is moving in tandem with the texture of the market. Aside of that, if you look at some of the individual movers, then Axis Bank, 3.5% uptick here, mixed set of numbers, but some reprieve in terms of asset quality, although loan growth is at a 12-quarter low. Profits have been good, and some of the one-time tax gains have been used towards provision. So Aisha Motors is the other one that's doing well. Wipro, of course, as I mentioned, numbers were better than expected. There was a bonus announcement as well in the ratio of 1:1. But guidance came in as a bit of a disappointment. Sun Pharma, ICICI Bank and Bharti Airtel. So gainers are few and far between, just about 7 to 8 gainers on the Nifty. Otherwise, you have a lot of these names like Maruti, Bajaj Auto, all of them are extending losses. M&M as well, even BPCL, Adani Enterprises, all of these stocks under pressure. Looking at the open, we have broken below that 24,600 mark as well. Which stocks would you keep on your radar for today?
So Nanta, I would stick with the defensives, like select stock from the pharma basket like Dr. Reddy's still holding strong. So we may see some consolidation around the current levels, but there's a possibility that we might see an uptick once we cross the 6,800 barrier in Dr. Reddy's. So that should be on your radar with 6,600 as a stop. At the same time, since the majority of the stocks are, reeling under pressure, PSUs, Canara Bank, there's a fresh breakdown. The stock is down nearly 1%, and we may see another 5 to 10% kind of a cut in this stock. So one can look to go short through 105 as a stop. And then we have BHEL, which we have recommended to our clients also. The stock has witnessed a fresh breakdown below the long-term averages after this almost 1 month long consolidation. So here also we may see, a dip nearly around 230-35 zone. So with stop at 260, one can go short in BHEL as well.
Okay, those are the recommendations. But let's talk about some of the stocks that are in focus. Zomato, that stock is down 4% or thereabouts. The company will be considering fundraising via QIP on the 22nd of October. The stock has done phenomenally well, but off late it has come under a bout of correction. But would you say that at these levels, it's a good opportunity to take a position here as a positional play? Would you look at Zomato now?
So yes, we can start accumulating around this zone with lower band around 245 to 50 zone. So within this range, 265 to 250, one can look to accumulate and maintain a closing stop loss at 240 for the entire position. In the next leg of rebound, it can probably test 275 to 80 area. So one should be patient and accumulate gradually.
Okay, accumulate Zomato, that's the call. But I want to pull up the charts of a Manappuram Finance. The RBI has banned one of its arms, Ashirwad Microfinance, along with Arohan Financial Services, DMI Finance and Navi Finserv from sanctioning and disbursing loans due to pricing concerns. Now, the business restrictions on these NBFCs apply with effect from 21st of October. Of course, we know that MFI sector has been under stress since the start of the fiscal year, and delinquencies have risen for most of the lenders, and this has been red flagged by the RBI as well. A 10% down tick coming in on Manappuram Finance. Of course, brokerages have downgraded the stock after this development. And if you look at what Morgan Stanley has to say is, it has downgraded the stock to equal weight. Target price has been cut to 170 rupees, which is still higher than where it's trading at the current juncture. But the RBI's embargo on the new business by Ashirwad could hurt profit for Manappuram going forward, and it could play out for a long time. It won't really go away, very soon. And they've cut the consolidated earnings forecast by 20% for FY25, and for FY26 to FY27, it has cut the earnings forecast by 30%. So that's the kind of impact brokerages are seeing on Manappuram. But they've also pointed out that the standalone valuation, however, remains cheap, but investor interest will take a longer time to return here. That's what Morgan Stanley has said. Jefferies, on the other hand, has downgraded the stock to hold. Target price has been cut to 167 rupees per share. Major breakdown on the charts. Are you witnessing that today? A 10% cut, Manappuram. How do you approach?
Yes, so Nanta, it's a very sharp cut, and now we are closer to the previous swing low, which is placed around this 150-55 zone. So if it breaks, then this pressure may extend. The stock might test 143, 144 levels before witnessing any sign of respite or reversal. So as of now, one should be cautious. One should not jump into a trade. Wait the stock to some sign of reversal or a rebound consolidation before making any fresh trade. For existing position, 155 should be your stop.
Okay, that's the view. 165. That is an important stop loss to watch out for on Manappuram Finance. But let's take up some viewer queries then on that note. The first one is coming in from Nilesh Jain. He wants to know your thoughts on Crompton. Crompton CG Consumer down 1.5% or so. The stock has been witnessing selling pressure. If you look at the 1 month chart, even the last 5 sessions, although 6 month returns have been fairly decent in the range of 40% or thereabouts. 409, that's the level it's trading at the current juncture. On the downside, what kind of level should one work with, and should one average out if they're holding it?
So I feel that one should refrain from adding to your existing longs, especially if you are in losses. But if you have looking for a fresh entry, then closer to around this level, close to around 400 mark is something that one can look to buy fresh. With obviously considering that we are seeing market correction, and mid cap and small cap, they were outperforming so far. So we may see further downside also. So with strict stop at 385, one can look to go long around the 400 mark for any rebound towards 425, 440 area.
Okay, that's the view on Crompton. Hope that answers your query. But, Naveen has written in, he has queries on some auto stocks. Of course, we've seen a major correction on Bajaj Auto. Even Tata Motors has been falling. Autos, within the auto pack, would you look at this, as a buying opportunity, or would you say it's a good time to rotate out of some of these auto stocks and look at other sectors?
So auto, Nanta, we have already seen decent correction in some of these names, especially Bajaj Auto after yesterday's sharp cut. So closer to around 9900, 9450, 9500. This selling might subside. So if somebody is looking for long-term investment, that's the area basically where one can look at. And then comes Maruti. Basically, here also we are seeing marginal retracement from the record highs. So again, closer to 11,700, 750 zone is something where one can look to accumulate fresh. Among all these names, TVS is still holding strong. It's hardly retraced from its record highs, still holding about 2600 mark. So if somebody is looking for any short-term trade, then TVS should be the preference.
Okay, hope that answers your query. TVS looking good, if you are looking at a short trade. But let's talk about NBCC. There's a query coming in on this stock from Sudhir Poddar. He wants to buy NBCC at current levels, but is this a good entry point? That's the question. The stock has been fairly sideways. If you look at the last 3 month returns, 1 month as well, it has corrected fairly, quite a bit actually, 9%. Would you look at this or would you advise a buy here?
So I would rather suggest him to wait and let this stock stabilize above 115, reclaim that level and close. Because we, as you rightly mentioned, we have not seen any major correction in the stock yet. But now we are seeing a bit of an indication that there could be further, decline or consolidation or profit taking, which might result in the stock to retrace toward 95, 96 area. As of now, it's an avoid. Either one should wait for a breakout above 115 or a dip towards 96, not in between.
Okay, that's the view. I hope that answers your query. The next query that I spotted on our feed was on a Union Bank. Narayanan Ramchandran wants to know whether he should hold or sell. He has purchased at 149 rupees per share. Of course, the stock has come down quite a bit from there. Would you advise him to book losses here, or how should he approach? Because it is below his buy price as well.
True, and see PSUs, barring SBI, all the banking names they are still struggling. So SBI is definitely performing exceptionally well. So one way to look at it is that one can switch from Union to SBI or maintain a stop at 105 as a closing stop. We are almost very close to that mark also, and we have multiple supports around that area. So that might result in some consolidation followed by recovery towards 120-25 zone. In that case, also one should look to exit on bounce. So in PSU banking space, only SBI is something that one can consider. Rest one should look to accumulate, the private banking measures on correction.
Okay, and that's the view then on the PSU banking space, and also your query on Union Bank. Hope that answers your query. But a few more queries to go then. One query coming in on the railway pack. Anunay wants to know your thoughts on Titagarh. He's stuck with losses in this counter and wants to know if there's any scope in the near term to see a recovery, or he wants to know whether he should look at booking losses at the current juncture. Railway stocks, of course, have cooled off quite a bit, right? And they have been chugging along, so to say. But if for somebody who's stuck with some bit of loss here, how should one navigate?
Yes, in fact, that's the story for majority of the defense, railways, and other PSUs as well. And since they are already down roughly around 40-45% from their record highs, still we are seeing pressure emerging on every uptick. So similarly, there was an attempt of recovery in Titagarh also. The stock tried to reclaim its long-term averages placed around 1200 mark. But it couldn't sustain in yesterday's trade, and again we are seeing profit taking. So, but yes, I feel that there's a possibility that the pressure might subside. After this decline, there could be some consolidation. So, if you are okay holding the stock, let's say for 1-2 months, one can maintain the stop loss at 1000 levels and maintain your longs. Gradually it can extend this recovery towards 1350 1400 area. So around that area one can look to reduce your position.
Okay, that's the view. I hope this answers your query. Next one's coming in from Shomili Ghosh. She wants to know your thoughts on a Ratan India Power, which she purchased at 17 rupees 58 paise. Making a bit of a loss here, the stock is trading under 15 rupees right now. Although it has given great returns, on a YTD basis and 6-month basis, but it has cooled off significantly. And given the fact that she is making a loss here, what should she do with her position?
So I would recommend maintaining a strict stop at 14 for our existing longs, because here also we are seeing gradual drift, but it's comparatively better means in terms of price action and volume. So as of now, still there is a possibility that it might make an attempt of recovery. So until we break 14 mark, she can maintain the longs. In the next leg, 17, which is a buying price, could be the area where it might resist first. And if it breaks, then 21 can something is also that it can test.
Okay, that's the view on Ratan Par. Hope that answers your query. The next query is coming in on the fertilizer pack from BU Dipankar. He wants to know your thoughts on what he should be doing what he should be doing with the stock, given the fact that he wants to know if it will hold that 114 level or will it fall further. Right now, I want to see what National Fertilizer is really doing. Don't really have the chart open. How is the entire fertilizer pack stacked up at the current juncture? Deepak Fertilizer, National Fertilizer. If somebody has positions here, it's a fairly volatile pack, right? How should they navigate?
Certainly. So, see, among all these names, I feel Deepak Fertilizer is still comparatively better. The stock is still holding around its record highs, though it's also seeing some consolidation and profit taking at the higher end. But there is a marginal retracement from the record highs in comparison to what we have seen in the other fertilizer name like RCF, NFL. So, if somebody is holding NFL, they are trading at a very critical juncture, the long-term support zone. So if it breaks, let's say 113, then this pressure may extend and the stock might, inch toward 105 or maybe lower. So that should be the stop loss, strict stop loss if you have any existing position. And for fresh buying, one should look to accumulate Deepak Fertilizer, with the 1 month, 2 months kind of a time horizon in the next 5 to 10% kind of a down move and hold the long. So among all these names, Deepak Fertilizer looks strongest.
Okay, that's the view. And I think for National Fertilizer also, he mentioned 105 rupees as a stop loss. I hope that answers your query. The next query is coming in from Hemant. He wants your thoughts on Ujjivan Small Finance Bank. He has some holdings here. He holds 4,350 shares at an average price of 47 rupees. He's seeing a 20% loss, he's saying. And he wants to know what he should be doing. If you look at all the charts, over time periods of 1 month, 6 months, YTD, stock hasn't really been, hasn't been able to make any kind of recovery. 20% loss. How or what should he do?
So Nanda, yes, there were attempts of a bounce, a couple of times in the recent months, but it couldn't sustain. And now we are at a very major support area, which is the long-term, averages on the weekly charts. So close to around 37 is something that you should maintain a stop, because in case if it fails to hold that, then it's set for 32 or maybe lower. So he should restrict the damage, and in case if it fails to hold 37, he should exit. In case if it sees any bounce also, so close to around 44, 45 zone also, he should look to exit, because largely it's likely to remain in the range with bias on the negative side.
Okay, that's the view on an Ujjivan Small Finance Bank. Then the next one is coming in from Kartikeya Singh. He wants to know your thoughts on a Supriya Life Science, and he wants to know if it can be added at current levels. Last 5 sessions, it has been in a downtrend. Would you advise a buy on this particular stock?
So comparatively, it's still holding strong, but volumes are almost negligible. So for very short-term trades, one should refrain from buying such counters, because in case if the market corrects, and especially the mid cap and small cap, the pressure we see in low liquid counters are largely immense. So for a time being now, one should refrain from making any fresh bets. But if you have any existing position, 525 should be a strict stop loss. Once we close above, let's say 580, 85 mark, then there's a possibility that the stock might inch toward the previous record high, which is around 650 area.
Okay, that's the view on Supriya Life. But with that, I think we've come to the end of the query segment. Ajit, I would like to thank you for taking out time and joining in and sharing your thoughts with us this morning, and of course, helping our viewers as well navigate with all their stock holdings. Look forward to connecting with you again.
Thank you. Thank you.
Buying emerges at lower levels. But with that, we are totally timed out on this edition of Opening Bell. Thanks a lot for tuning in. Have a great day, and of course, come back and join us for Closing Bell at 3:30 p.m. Goodbye.